Recently, I made two videos on my YouTube channel on new smart money concept called volume profile concept, and the same concept also I added in my recently launched swing trading course, that is 15 swing trading strategy in Nifty, Bank Nifty and stocks. And many of you like that new volume profile concept. So in this video, I'm going to discuss the second smart money concept, which I've never shared anywhere in my earlier YouTube videos. And the new smart money concept which I'm going to discuss today, it's very powerful, which can give very high win rate, which can work on any time frame and which can work on any instrument. And the name of that smart money concept called fair value gap concept. You already know that how powerful gaps are on the chart, and already I made many videos on gap strategy, but this strategy also based on gap, but the new type of gap called fair value gap. This setup can work on any time frame, whether it's a higher time frame for swing trader, or if you are a scalper who trades on smaller time frame, you can try on smaller time frame also. So now let's go to my laptop and let us discuss this new smart money concept, that is fair value gap, in a detailed way. And the concept which I am going to discuss, that is fair value gap concept, I am sure 90% of you are not aware of this concept. Whether you are an experienced trader or a new trader, still I'm sure 90% of traders do not know this concept. After watching the entire video, if you think that if you knew this concept before, then put it in the comment section. And if it is for the first time, that also you can mention in the comment section. Now, before we go deep into the fair value gap strategies, it is very important that you need to know what is actually fair value gap, how this setup looks like. Because as I said earlier, I have not discussed this concept anywhere in my earlier YouTube videos. So that's why I'm going to take few minutes to explain you what actually fair value gap mean. So fair value gap is a very simple setup. It's a 3 candle setup. It's a 3 candle setup. That means you can see that this is the candle 1, this is the candle 2, and this is the candle 3. Here also candle 1, candle 2, candle 3. So when you see 3 candle setup, next one is you have to see that candle 1 and candle 3, there should be gap. Gap means wicks of candle 3 or wicks of candle 1 should not overlap. Okay, if you see first candle and third candle, wicks are overlapping, that means it's not a fair value gap. There should be gap between the first candle and third candle. On bearish fair value gap also, it's a 3 candle setup, and here also first candle and third candle, there should be gap. Okay, if it overlaps, that means if the first candle wicks is something like that and third candle wicks comes here and finally it makes body like this, then it's not a fair value gap, because you can see that there is a contact between the first candle and third candle. Okay, this is not a fair value gap. Now let us understand why fair value gap happens. So it's a smart money concept. That means when there is an imbalance between the buyers and sellers, fair value gap happens. So what does that mean? That means when buyers are in the big number compared to sellers, then imbalance happens. Or when there is a sellers in big number compared to buyers, then imbalance happens. And you see that second candle makes one huge candles, and there will be a gap between the previous candle and the next candle. This is the master candle, this is the previous candle, and this is the next candle. And whatever the gap you see here between the first and third candle, that works like a magnet on the chart. That means price have tendency to come back and fill that gap. If not full, at least sometimes price can come and fill that gap and again can start going up. So that means when you see this kind of price action, when price comes in between that gap, you should know that most of the time price have tendency to take support and goes up. Okay, that means taking a long trade here and maybe keeping a stop loss may be one of the good setup. Anyway, strategy we are going to discuss in coming slides. What I'm trying to tell you here is that when you see this kind of setup, if you see a bearish candle here, don't try to go and short here, because chances of reversal is higher. And when you see that there is a fair value gap like this and price goes down and after some time comes back and making a bullish candle, then it's not a place to take a long trade thinking that now price will go up, chances of price again going down is higher, because this entire level can work as a resistance. Okay, so in a simple term, we should remember that fair value gaps are like magnets on chart. So now you have understood the basics of fair value gap. Here you can see that this is the candle 1, this is the candle 2, and this is the candle 3, and you can see that there's a gap between the candle number 1 and candle number 3, right? So the green color which I marked, that becomes your fair value gap. So that means this level can act as a strong support on your chart. Though you can see that there are many fair value gap. For example, this is also fair value gap, right? But price did not reverse from here. So that is why when we go to the strategy, I'll show you which are the kind of fair value gaps are high probability, which are the type of fair value gaps are low probability, when you should take fair value gap, when you should not take. For example, here also you can see that this is also fair value gap, because candle 1, this is the candle 2, this is the candle 3, right? So this is the high of candle 1, this is the low of candle 3. So this entire level is likely to act as a strong support. Only should trade on fair value gaps on specific location, which I'm going to discuss in coming slide. Okay, that is what high probability fair value gap setups. That means which are the setups when you see on the chart that becomes high probability. First one is when you see fair value gap happens in the direction of the trend, that means it is high probability fair value gap. Okay, what I mean by in the direction of trend, this is I have taken example of Aurobindo Pharma, and you can see that what is the trend. Trend is on the upside. Now what you should look for, you should look for only bullish fair value gap, right? And you can see that here there is a bullish fair value gap, candle 1, candle 2, and candle 3. Now you must be thinking that this candle is a bearish candle. Is it a bullish fair value gap? Yes. Candle color doesn't matter. First and third candle color doesn't matter. Only second color candle matters. Okay, that means if it's bullish fair value gap, means second candle has to be green candle. So this candle red doesn't matter. Only thing you have to see that first candle and third candle is there a gap, right? So then you can go and mark this level on your chart, and when price comes here, that becomes your strong support. For example, another fair value gap you can see here, candle 1, right? This is the candle 2, then this is the candle 3. So it made a fair value gap. So that means when price comes inside that gap, that becomes your high probability to take the trade. All right. This is also fair value gap, candle 1, candle 2, and candle 3. This is your fair value gap, but you can see that price did not enter inside. So if it did not enter inside, yes, you can't do anything. But when you see fair value gap, you can go and mark that level. And most of the time you can see one of the high probability setup. That is what I mean by take the trade in the direction of trend. Okay, this is the Bata India stock, and you can clearly see that stock is in the strong downtrend. So what you look for? You only look for bearish fair value gap, candle 1, candle 2, candle 3. And you can clearly see that there is a gap between candle 1 and candle 3. And when price comes in that range, that is the high probability trade to take a reversal trade. That means taking the trade in the direction of trend, because price likely to reverse from there. Second is high probability fair value gap if it happens on breakout candle. What I mean by that, before going to the chart, let me just explain it here. Assume that there is a resistance here, price going and facing that resistance, and finally breakout happens with a one bullish candle. And when you look at the previous candle, maybe previous candle was like this and third candle was like this. Okay, so you can clearly see that there is a fair value gap here, right? And you know that price when comes back to that level, chances of price reversing higher. Okay, for this video purpose, I have taken this Ashok Leyland stock as my example. You can see that there was a resistance here, right? And finally, this candle has broken the resistance and made a huge bullish candle, right? And where is the third candle? Third candle made a gap up candle. And where is the first candle? First candle is here, right? So from that breakout candle, previous candle and the next candle, it created a gap, right? So that means this becomes your fair value gap. The red box, which I marked here, that becomes your fair value gap. That means what I said, fair value gap is like a magnet on your chart. magnet means price gets attracted to that. So chances of price taking support from this level is very high when it makes a retracement. That is what I mean to say. Fair value gaps becomes high probability when fair value gap is created by a breakout candle. Okay, and the third one, when fair value gap becomes high probability, when it happens at the beginning of the move. What I mean by beginning of the move, so that means assume that price is going like this, going like this, going like this, and it is making some retracement and it again start going up. Okay, again it start going up. If the fair value gap happens somewhere here, then it becomes high probability. But price going up and makes a huge move, it's going and making a big move, and it makes a fair value gap here at the extreme end, then it's a low probability. Then you should avoid taking fair value gap setup because it may not work. Okay, for this video purpose, I've taken this example of Ambuja Cement. You can see that here Ambuja Cement was making a strong consolidation for many days and created a fair value gap because candle 1 here, candle 3 here. There is a gap between the candle 1 and candle 3. That is why I marked that green level, green box on the chart. So that means if price comes back to that level of fair value gap, then chances of price again reversing higher. So why it is a high probability? Because it is just the beginning of the move, right? It was in the consolidation, then move started. It becomes high probability. After that, you can see that within few days it started making a huge rally, right? Making a parabolic move, and then it created a fair value gap here. Price, you can see that easily broken that fair value gap. It did not take support and started going up, rather it started coming down. So that means you should avoid taking the fair value gap when it happens at the extreme end, but when it happens at the beginning of the move, it becomes high probability. So we have seen the high probability fair value gap setups. Now let us see low probability fair value gap setups. That means when you should avoid taking the fair value gap setup, one is avoid if fair value gap happens in the sideways market. That means if market is in the strong trend on the upside, fine. If market is in the strong downtrend, fine. But if market is making a sideways trend, then it is better to avoid fair value gaps. Arvind Limited, from here, there is no clear trend. There is no clear trend of going up or going down. It is trading in a sideways move. So such time when you see fair value gap happens, for example, you can see that candle 1, candle 2 and candle 3. There is a fair value gap here, right? So you can see that it did not work. Price came, broken it, went down. Again price came, broken it, went up, again came down. So it will be zigzag when you try to take the fair value gap setup in the sideways trend. And finally, avoid if fair value gap happens extreme end of the move after one-sided parabolic move. And this chart I already discussed. That means if it happens at the beginning of move, high probability. But same time, if it happens at the end of the move, that means when it made a parabolic move, almost extreme end of the move, then it is better to avoid this kind of fair value gaps. And how about entry and exit? Entry should be always look for how big is the fair value gap box. The box what you see, how big it is. Okay. If the fair value gap is too big like this, or it is smaller or medium. If it is smaller or medium, then you can keep your stop loss below that fair value gap box, right? You can keep your stop loss here and you can take the entry even the upper side of fair value gap. You don't have to price to come middle of the fair value gap. But same time, if you see that fair value gap box is very wide, then if you take the trade when price comes here, makes a bullish candle, you take the trade, and if you keep your stop loss here, then your stop loss is going to become very big. If that fair value gap doesn't work and price reverses, your loss is going to be very big because your stop loss is very big. In such case, what to do? In such case, when you see that fair value gap box is very big, then don't take the long entry on the upper side of fair value gap. Allow price to come at least 50% of fair value gap and wait for a bullish candle. If you see that price is making bullish candle here, then if you keep your stop loss below the fair value gap, then your stop loss will be smaller. Okay. But same time, when you see that fair value gap box is not too big, then if you see that price is taking support here, then you don't have to wait for price to come to the 50% of that fair value gap because your stop loss is not too big. Okay. That is how you can follow risk reward in your trade. And as I keep saying every time, fair value gap also not a holy grail. Sometimes it can also fail. High probability fair value gap also can fail. That's why you should always trade by keeping stop loss. So guys, that's about this video on fair value gap concept. And as I said earlier, this new concept which I am sharing first time on my YouTube channel, which already shared on my swing trading course, which I launched recently, and in that course you can see this kind of smart money concept I discussed in a more detailed way. If you are interested to learn more about smart money concept in swing trading, then you can go below this video in the description section, check my new swing trading course, and if you are interested you can enroll for it. So that's it guys from my side. I'll see you soon with a new video. Until then, bye and take care.